Good morning and welcome to this weekly market update from AGM Markets. Today is the 4th of February 2014. What we'll do today is go through some technical analysis on Euro, Dollar, Cable, Dollar, Swiss, Aussie and Gold. Just going to review what's been going on in the markets, look through any charts, any sort of setups that I think will be of interest, and give some sort of outlook for the week in terms of technical analysis and the sort of levels to look out for. For any new followers out there, we have 3 moving averages on each of these charts. The red one is a 50 simple moving average, the purple is a 100 simple moving average, and the gold 200. We'll not make any trade calls recommendations in this video. You trade at your own risk. If you could please read our full disclaimer on our website, which is www.agmmarkets.com. Okay, let's have a look at the euro dollar. So this is the weekly chart. Let's briefly look at this chart, mainly just in terms of the sort of the previous sort of week's weekly candles. Obviously, because we're doing these videos on a weekly basis, there's no point in the setup's pretty much going to be the same every week, and it kind of is. I mean, let's just briefly look at it. The setup that's still in play is this one here. So this is the weekly fib from the 2011 high to the 2012 low. Sellers coming in at this 61.8% retracement at the one spot 38.28 level. They're trying to, I mean, the sellers have already come in, they're trying to bring this one down. So this setup is technically complete when it comes down to these 120s. So we're still a long way away from that. And of course we had this setup as well, don't forget. So from that low there of 2012 to that the sort of first high of 2013, that setup played out in this sort of 50%, 61.8% range support zone that came out, and that pretty much took out those highs there. So yeah, they're the 2 fibs that I'm mainly interested in terms of this weekly chart. But in terms, so in terms of the last week's weekly candle, it's a bearish engulfing candle. We engulfed the previous week's candle, so that is a selling, that's a bearish, technically a bearish signal. You can see we struggled at these highs. We spoke about this in the previous sort of few weeks videos. These highs here at the 138s, you can see there's 4 candles there, 4 upper wicks, tested that level, couldn't get a weekly close above, and also here to the left as well, 2 tests. We had that bearish engulfing there as well. We had a brief sell-off. So key line in the sand is the 138s here on this weekly, and it is still holding. So the next sort of short-term support in terms of this weekly chart is this level here, which is the one sort of 33.46s. So let's just call it 133.50s. I think that is also a 50% retracement as well from this fib here. Yes, it is. Well, it depends where you look at it from, really. If you look at take it from that high there, then it's around that level as well. So we'll flip to that on the daily. In fact, we'll do that now because that's the weekly pretty much done. There's nothing else majorly interest on this chart. So yeah, if we're looking at, because remember this has been the key low here, the key obvious recent swing low, and this is where we've been looking at a lot of the fibs from. For example, remember we had this fib here, so that was the first one there, lovely bounce off that 50%. Then you move the high up to that one there, and then we had that 50%, and now this is the new high up here. So the new high is the 138.89s, and you can see the 50% coincides with that support. Well, it is the support basically. So let's just draw 133.50s on there. Nice sort of confluence support zone there. Of course, we're still quite a way away from that at the minute. It's sort of around, well, about 175 pips away from that currently. But you never know, if we get swerve, if we get some strong US data out this week, then we could see a quick drop to that level. So keep that in mind. So that's one fib setup I'm looking at, and then. And I'm sure a lot of other people look at it. I mean, basically, in these videos, I'm going for the sort of obvious fib setups that will impact the markets, and a lot of people will be looking at. Therefore, the levels will tend to be quite strong. This was another one we're looking at. It's not the greatest of setups in my opinion, because it's not clean. I mean, because this fib is still in play, so and this is the more obvious one, which is valid on the weekly chart as well. So this is the main one. Those highs didn't really get broken in terms of a daily candle close. This fib is still in play, but for the shorter term players, the more aggressive dip buyers, we had initial bounce here off the 61.8% retracement. You can see, I'll just zoom in quickly so you can see a bit clearer. So we had a brief bounce up, but a slightly weak bounce, and surprise surprise, you can see why we got capped there. It's because of this move here. So from this short term one, from that high to that low there, we'll just wind up so you can see a bit clearer. Surprise surprise, we got sold off at the 50% there. So the short term sellers are in play, and in fact I'll bring it to the 4 hour because you can see it much clearer. So this was a setup. I think we may have spoken about this in last week's video. So that was the high, that was the original swing low. You can see this 50%, lovely resistance, nice sort of bearish candles forming, nice upper wicks there. It was chopping around for quite a while at the 200 SMA, I remember, but then you can see we've got the aggressive sell-off. As soon as you closed above this sort of 100 SMA here, then we got a lovely sell-off, and we took out the lows. So the next move really, well, you can look at that fib there, or for the shorter term players, if we do get a bounce up, this is the fib I'm looking at, and this is what I'll be looking at on the sort of the 1 hour chart as well. So that is the recent most obvious swing high, and then to this swing low here. So it looks like it wants to sort of grind up at the minute. If we, of course it doesn't have to, but if it does grind up, then it's 50% here at the 136s. So a nice bit of confidence as well, the round number, which I'm sure will probably be an option expiry as well. So let's draw these 136s up here. Yeah, so 136, just below the 50%. And you can see it well as well in the 4 hours. It's the recent swing high, and that is where we're looking for shorts to come in if we do grind, if we do continue to grind higher. And that's pretty much it for the euro this week. I mean, if we continue to sell off, then you've got this support here at the 135s. But if we get a bounce up, then the 136s is what I'll be looking at. And of course, you can look at the 135s as well. If you're looking at round numbers, and you'll look at sort of short-term scalps, then the 135s as well. Is always an interesting one to keep an eye out for. So you can flip out to the 1 hour if we come down there, keep an eye on that, see what happens. But it's a little bit choppy at the minute. I'd look for a clearer level personally. Cable on the weekly chart starting to get very interesting now. It's been due a sell-off for a while, and we spoke about that. Let me zoom out a bit. Spoke about for a while that we start to get very toppy at this level here, the sort of 160, well 64.93, so let's call that 165's key line in the sand for cable on the weekly. We've spoken about this many times on this weekly chart. In fact, I'm going to zoom in because you can see how many candles we had spike above that, similar to euro as well. So yeah, 4 candle spikes above this level, and the sellers closing it below. And significantly, last week is pretty much a perfect weekly hammer reversal candle there. It's a bearish hammer, and then surprise surprise, yesterday we sold off, so it's doing exactly what it's meant to do, and we could get a very quick retracement here. In terms of this weekly chart, this is all about this fib here, in my opinion. Of course, we're still a long way away from it yet, but the 50% comes in at one spot 57.38, and of course these moving averages flattening out as well, the 100 and 200 there just above that, so we could get a really decent confluence if we get down there. Of course it doesn't have to get down there. There's a short-term support here on this weekly. You can see multiple candles piercing above that level, so previous strong resistance could turn into support, and surprise surprise, this is the level that we're testing at the minute on this daily. You can see it's already having quite a decent reaction already to that level. And also this goes in nicely to the daily chart now. So we flip it to this daily. This fib here is not the greatest of fibs and not the most obvious of fibs, but why I like it is because this 50% coincides with this level pretty much to the pips. These ones, 62.60s, key line in the sand here for cable going into this week. Previous resistance around here to the left, and you can see it's been previous support here as well, and you've got the 100-day moving average. So it's all about the daily candle close here. If we get a nice hammer, then we can continue to grind higher, but I'm not sure about it. It's all about the price action here. I wouldn't be surprised to see it break low and get more of a healthy retracement, because this current weekly candle is looking very bearish. It's been due a healthy retracement for quite some time, so we may get a sort of brief pop up, and then sellers come back in at an appropriate level, and that appropriate level could be, if we flip it to this 4 hour, I wouldn't be surprised to see it get capped at one of these levels here. So you've got this fib from the high, and that 50% comes in at 1.6460s, and that coincides with these moving averages as well. Or if you want to bring it lower, some people will be looking at this one, I would have thought, as the swing high. It's a tricky one to call, really, and that's 1.6440s. So keep an eye on that. In fact, I'd keep 1.6450s up there as well, as an interesting sort of resistance, a sort of round number resistance as well. You can see there's nice resistance around here to the left, around there as well. I'm hovering the cursor over, so interesting level, that one. Or of course we could, if we get a brief pop up here, you can see from where I'm hovering the cursor over now, previous support here, that could act as resistance. But I'd ideally look for a sort of healthier retracement for a selling opportunity. Okay, let's have a look at the dollar Swiss on the weekly. Still very choppy, nothing much of interest. If we look at last week's weekly candle, it's just a standard green candle, really, nothing much of interest. It's looking like it wants to grind higher towards this sort of 50 week moving average, which stands at the 0.9248. Let's flip it to a shorter term time frame. So let's look at the daily chart now. Daily chart, we have trend line resistance there. Of course, we're still a long way away from that, but that will coincide with that that weekly moving average. That's why I'm keeping it up in there. So that's the trend line from last year. And yeah, in terms of daily, nothing major of interest. It's getting choppy around these two moving averages. You can see the 50-day moving average and the 100-day moving average, getting choppy around there. In terms of the 4 hour, this is one fib to keep an eye on, and this is what has pretty much been playing out. You can see it much clearer on the daily actually. You can see there, nice support at the 61.8, so that's what we had last week. But not the greatest of fibs in my opinion. I prefer a sort of smooth uptrend, nice reversal, and then come back down, but it's a little bit chopped around for a bit and then retrace. But it's all about the price actually. It's a lovely sort of reversal candle there, nice lower wick. Quite a few tests this 61.8. In fact, there's 4 daily candle tests there, and then we're grinding higher. So it looks like it wants to continue to grind higher, but we need another sort of close above this 100-day moving average for that to happen, and then of course with the 200-day moving average just above that. But not the greatest of charts. Dollar Swiss is looking for a bit of direction. It's very quite choppy. I think I think Euro Dollar and Cable much more interesting charts in my opinion. Let's move over to the Aussie, and this weekly chart's been really interesting. We spoke about it for a long part of last year. This weekly fib here, that was from the high of 2013 to that swing low there. Then we had that lovely bounce off the 50% rotated higher, and a mini sort of double bottom there, and then we had that weekly candle close below this key level, which is the 0.8840s, and now we're trying to get a weekly candle close above it. So I'd still keep this, I keep the level on the chart definitely. So let's draw a level over that key sort of swing low there. So that is one definitely to keep an eye out for. And then what I would personally be looking out for is on this daily chart, using that where we bounced off there, that key swing high, which was the previous 50%. I then draw the low to this low here at 0.8655s, which is the recent swing low, and keep an eye, if we grind higher towards this 50%, which is at 0.92s, keep an eye out on the price action there. It looks like it wants to come up but we need to get a daily candle close above this 50-day moving average first. And then of course your 100 and 200 day moving averages around that level as well. So in terms of the daily chart, that is the focus. And if we move down towards, I'm just to delete that fib just to clear up the chart a bit. So if we move down towards the time frames, in terms of the 4 hour, it is all about this setup here. But surprisingly enough, it hasn't actually, well, it started to peak out. It looks like it sort of has hit a fib level, but because of the way it's sort of formed. But the reason is because it's not a fib, it is a level, which is the 0 spot. I've just done that wrong. Bear with me 2 seconds. It's the 0 spot 89s, the key line in the sand for this Aussie chart. But I'd still keep this fib up here, because I think, well, it's currently refining resistance at this level, but if we come back down, I would be surprised to see it's 50% then act as support, and also it is previous resistance around here as well. You can see to the left there, along with the 50 SMA. So keep an eye on that. But it's all about the key line. Well, the key level for this week is this 0 spot 89s 4 hour chart, very interesting, and also keep an eye on the daily close as well. So it's a key test on the daily. If we close below, then we could sort of grind lower. I'd expect this 4 hour to close sort of slightly bearish as it is now, come back down, and we should get some interesting price action around this 50% level, maybe an interesting support, and continue to sort of grind higher, so that then this daily, it then conforms with this daily, and we get grind higher towards this 50% at 0 spot 92. So keep an eye on that. Very interesting stuff on this Aussie chart. Okay, that's the forex done. Let's have a look at gold. Gold's still quite disappointing, I think. Not a majorly interesting chart, and it's just slowly grinding higher. Because we've had a quite an aggressive sell-off all of last year on gold, and we put in these lows here at the 1197s, and it's just trying to retrace higher now towards this 50-week moving average, in my opinion. So me personally, just looking at sort of buying opportunities. Nothing much on the daily. It's all about the 4 hour. Just sort of looking at the wicks here, and just so you can see where we sort of base for a certain period of time. For example, there, 12, well, pretty much 1240s key support. Just look for sort of basing on the chart, and then just getting on a sort of reversal candle. So yeah, it's just playing the levels really, just sort of any sort of dip or retracement, just getting in. I'm not massively interested in shorts unless we get to a sort of more healthier level or a healthier fib. This one here, for example, this is a sort of decent swing high to that swing low there. We should be able to see that clearer on the daily chart as well. Yes, we can. So if we zoom in here, it's pretty much the high of the daily chart to the low, which I like to see because it's a nice sort of obvious move. Is what a lot of people will be looking out for. Therefore, more people will likely to have orders in at the 50%, and therefore we should get some decent price action. So yeah, it's all in terms of the buying opportunities. It's all about 1240s at the minute. Nothing else major really. I mean, if you want to flip it to a sort of more shorter term time frame, you can see on the 1 hour chart there, lovely basing there, plenty of 1 hour candle spikes below a level. Sellers trying to push it down and they can't, so what can't go down must go up, and that's what's happening there. Previous 1 hour candle's nice and bullish, so it looks like it just wants to grind higher, to be honest with you, and grind higher on this daily towards this 200-day moving average and this 50% retracement at the 1300s. Yeah, that's pretty much it, to be honest with you, on this gold chart. Okay then, that's all for today. Hope you found that video useful. Yeah, I hope there's some interesting setups there that will be quite useful for you. If there's any other charts that you want to have a look at next week, then feel free to send a tweet to our Twitter feed, which is at AGM Markets, or post under the YouTube video on our YouTube channel, which is AGM Markets. Hope you have a great rest of the week trading, and I'll catch you next week. Thanks for watching.